The dollar is yet again breaking through its highs for the last year or so, trading at 110 this morning for the first time in multiple years. The dollar index continues its march higher off of the back of Friday's really strong data from the jobs report. And I want to talk about what this means for all different kinds of markets, whether it be the S&P, what it means for gold, what it means for crypto. Let's dive in. As we get started in today's video, I do also want to let you know that currently our Signal service is 30% off. If you're interested in getting access to all of the trades that I'm sharing in depth every time I take them and get them notified to your phone with full breakdowns and analysis, check out the first link in the description down below. We're currently doing a 30% off discount. And if you chat with us live on our website by using the chat with us link in the description, you can currently get 35% off for YouTube subscribers who message in and just let us know you're interested in the sale. We'll give you that extra discount. So welcome back to another video today, guys. We're going to be taking a look at indices and commodities as well as some currencies in reaction to everything we've been seeing recently. There's some interesting trends that are forming that I wanted to discuss, specifically with the recent strong jobs data and maybe what we can look forward to this week. Speaking of this week, we have two really key important factors coming out. We have CPI and PPI. Now, these are two inflation measurements that the Fed looks closely at to determine whether or not they want to raise, keep rates at the same level, or cut rates lower. And the market, specifically gold and stocks, would like to see these numbers to cool off because it could allow the Fed to then cut rates, which would make assets do well. But if you get the opposite, if inflation continues to rise, it could be problematic. And when we take a look at CPI, which has been on the rise, forecasts are for a 2.9% inflation read. Now, obviously, if 2.9% happens, the market won't love that, but the market would freak out if it's higher than 2.9, and it would celebrate a lower than 2.9 reading. So we'll see where that comes in and where that data lands this week. Additionally, we'll get the producer price index number, which has been for the last 3 times higher than market forecasts. This is showing inflation is being problematic, it's being sticky, and what the market wants to see is a red print. Now, this red indicates that it missed expectations. Now, the yellow dot here is our forecast. So what we've programmed this software to do is show up blue if it's higher than expected and red if it's missing expectations. If you're somebody who is bearish on the dollar and wants to see things like gold and stocks to go up, you actually want inflation to come in soft. You want it to come in lower than the yellow dot or the forecasted number. So 3 consecutive up moves is not particularly great to the stock market, which wants to see rate cuts. And in order to get rate cuts, you need inflation to play nicely. So the NASDAQ continued its drop here this morning. So Friday, we saw the big sell-off on strong jobs data, which was very confusing to people. And if you stick around to the end of this video, I'll play a clip where I outlined why it actually made a lot of sense why stocks dropped on strong jobs data. So stick around to the end of this video if you want to see more on that. But we saw some follow through here this morning. And I could be wrong about this, as I always could be wrong with my ideas that I share in these videos. And again, just to reiterate, this is not financial advice, and it's always in the disclaimer of this video that I'm not here telling you what to do with your account. But I think that we may have actually started to see a bottoming formation starting on the NASDAQ. This level of support here, 20,400, was a key area where bulls took back price action and pushed it higher. And we've been consolidating and trending lower here for the last few weeks. So when we look at the NASDAQ hitting this trend line and coming close to this support level, we may test the lows of this support zone. But I would not be surprised if we're closer to a bottoming formation. With Trump taking office pretty soon, I think that the market is going to be excited about that. They're going to be excited about the less regulation, less taxes. That prospect, I still think, is a very strong catalyst for markets in 2025, and I remain very bullish myself. Speaking of which, I have a long position currently on the S&P 500. This is a trade notified inside of our VIP group, and although the entry was not perfect, you can see this level of support I still think has the potential to hold here for bulls. If it doesn't hold, if we start taking out the lows that we printed here early in the morning, that's going to be my signal to stop out and move on from this trade and just take a controlled loss. The Dow Jones is also sitting at support as well. Looks pretty good, looks due for a bounce in my personal opinion. And with 42,000, this kind of round number holding so far, we'll see if we can get a bounce at least up to the 43,200 level that we have marked here on our chart. And gold continues to be a bit of a frustrating one to analyze because what we see here with gold is just not a very decisive move in either direction. What we can see is that we've seen a nice little rally off of these lows, but this is just repeating what we've seen happen for weeks now. Price makes a good move to the upside and then sells off up to this, resistance, sells off, and then buyers are stepping in around the 2550 to 2600 level. Also, I wanted to mention that today's video sponsor is ProfitX. If you haven't heard of ProfitX before, they allow traders up to 1.2 million in simulated capital. So if you're looking for, to take your trading to a larger capital basis but lack the capital, you can trade their simulated capital, which basically means you're trading a demo account but can make real profits should you pass the requirements in order to qualify for a payout. They offer up to 80% profit sharing. They have unlimited trading days, and you can trade up to 800 assets in one prop firm. So if you're interested in checking out ProfitX, there's a link and promo code down below in the description, and you can use the code A1Trading15% to get that discount. Now, stock selling off has been a little bit confusing for a lot of people because they wonder how the heck on good jobs data did the stock market sell off? And I had that discussion here today in reference to the soft landing, and I drew a really nice airplane picture. So check out this clip from the live stream. There's a lot of market theory we got to discuss because this is a little bit more advanced. If you're brand new to fundamentals, the jobs data on Friday might have really confused you. Let's try and make light of it because it's a really important thing that we understand this. Why is it that jobs data on Friday beat expectations by a long shot, and in response, strong jobs, the stock market sold off? Well, here's why. We're trying to land a ship here, or let's think we're flying in an airplane, and if I draw an airplane, it's going to be a terribly drawn airplane. Actually, hey, we're starting out right. Let's see if we you've got the airplane jet kind of like little thing here, and then there's this, right? The wing. I don't know. It's kind of a good jet, right? Could be worse. Anyways, here's our airplane, right? We're trying to land this thing, and what I mean by this is our inflation situation. This is the inflation plane. Okay. Now, the inflation plane, we're trying to land it. You don't want inflation to go up. We're trying to land the plane, right? Our goal is to land, right? So if we're trying to land, actually, you know what? I'm going to give myself a better canvas for this. So if we're trying to land the plane, right? We don't want to go up, right? That's no good. We don't want inflation to go up. We want inflation to do what? The ideal is a soft landing, right? Where you do this. By the way, oh, this is a great analogy. Holy crap, Nick, you're on another level with this one. 2% is our target inflation rate. Right now, we're up, let's say, close to 3%. Okay? That's no good. We don't want 2%. We don't want 3% inflation. We want 2% inflation. So to get inflation down, the Fed has to navigate this plane. The Fed is the pilot, by the way. Fed is the pilot of this plane, okay? So we want data like jobs data, PMIs data. We want it to stay strong enough that the plane stays intact, but we don't need it to be so hot that we're just taking off again, right? That's the issue. We don't want this because then inflation goes up too. Our altitude is inflation. Oh my gosh, this is the perfect analogy. That's why they call it that's why people call it the soft landing, right? The soft landing is we get inflation to come down and we don't crash the plane, right? So if you restrict the economy too much and we cause a crash landing, the plane blows up. We don't want that, right? We don't want the plane to go up. We don't want the plane to crash. We want it to land softly. So to do that, economy has to hold up okay, but inflation also has to come down. Now, jobs data on Friday suggested which one? Scenario 1, 2, or 3? It was number 3. It suggests that the economy is ramping faster and that this could mean altitude goes up, aka inflation rises. We don't want that, right? We want inflation to cool off, but we also don't want the jobs market to crash either. So you want somewhere in between, Goldilocks, aka you want not too hot, not too cold. That is another way of saying it. You hear the two expressions that I hear most frequently are Goldilocks economic data and soft landing. Same kind of concept. We want data that's not too hot, not too cold. So people were confused on Friday because on Friday you had very strong jobs data and yet the stock market sold off. It's because the stock market is saying, oh boy, we're going higher, inflation is a problem, and we can see that reflected in the US 10-year Treasury yield. It's floating higher once more and ultimately spooking the stock market. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.